Hi and welcome to the Market Alert for Monday, the 12th of October 2020. So Friday stimulus hyped short squeeze sparks best week for stocks in 4 months, and the US dollar dumps. That was the first news item. And then Fed Evans says more QE coming if recovery slows down, a bit like Bailey on Thursday of last week with his third wave. The money is going to continue to be printed going forward. So let's have a look at the market for Friday, which started off moving to the upside. As we'd expect, you can see how the market was hugging the DP. You can see the green bars there as the market came down to this area in the pre-market, and then as soon as it opened, it moved to the upside straight up to the 200 bar moving average, where then it found bit of resistance before driving through and heading towards the high and the BRN there, with prices then reversing, and then you see the profit taking by the shorts there, by the long traders. And then we get a second one, and at this point it's closing below the 5 bar moving average, and it's time to take the money off the table. It's a shame really, because at this point there were 33 points, and by the time I got out of the trade, there was just 11 points, which is a shame really, because there was a good run on the initial open there, which you can see with all of the green bars, until the profit taking came in here. So prices then started to move lower and headed back towards the DP level. Well, we'd seen earlier the impact of the DP level, how it had been a support for this market. So as soon as we had the sell signal and the entry price was just below it, and it was going to be tough to actually get through here. So the market actually filled the trade, and then prices trade sideways, and you can see them bringing holding the market as the volume builds. And I decided to take out the trade and get rid of it before it turned into a loss. And again, you can see the volume building here as they bring prices back up off the DP level. So here we start to move to the upside. We then have a potential buy signal, and prices trade to the 200 MA. And as soon as I see this starting to happen, again, I know we've got a problem, because the volume is greater than the previous bar, but the range of the bar is shorter, which you can see there now as complete. So it's a case of offloading the position, and then prices come back, take out the stop, and then sit on the DP level there. You can see how powerful this is. Eventually it starts to drift below it, but they keep bringing it back, and it stays like this all the way through until we get towards the 10 a.m. It just does, as you say, come through here, and then still remains sideways, and then they start to bring it back. So it becomes in a sideways range, and that's how it stayed all out throughout the mid-morning. And then eventually you can see, before we get to the afternoon, prices actually starting to find support once again at the DP level. Prices move lower. Again, you can see them buying back at the 200 MA. As we just go through this again, you've just got that sideways move. Prices eventually break once they come back through the 200 MA. And then we see some profit taking on the short side as prices attempt to hold. And then you can see again the buying coming back in at the same level as the market retests here. Doesn't hold, and prices coming back eventually to close back above the 200 MA. And then once we get to some selling coming into the market, prices come back to the 20 bar moving average, and that's the end of Friday afternoon. So a very quiet afternoon. It's bizarre, because I thought we were going to start off with a really good session, which we did, and then by the end of the day the market was just stuck in that sort of DP 200 bar moving average, just below it, and failing to move lower. So let's see what we've got overnight. In the daily chart of the German DAX there, you can see that we're already at 78% and 89. That's drawn from here to here. So let's just remove this and add in from this high to this low, because we're getting close to this one here. So from here down to here, and see what room we've got on the upside. So 78 is at 13,200 effectively, which takes you across to this resistance here in this area as well. So watch out for this as you get to this sort of level, because it looks like prices are heading up at the moment. And then you've got the 89 as well, which is going to be the sort of the resistance here as well for prices. So between 78 and 89 is sort of the channel that you've got over here as well. So watch out for this as prices attempt to move to the upside. In the 2-minute chart, we can see the prices are above the DP and the 200 MA. They've been above this since 2 a.m. Around 2 a.m. the market broke through. You can see the green bars down there as the prices went through the DP, and they've more or less held down. We've gone through Friday's high, which you can see now. See how they drove it back through again in this area here. The increase in volume down here as well, showing this. So I'd expect a bit more of this at 7 a.m. when we get the futures market coming on stream as well. Let's have a look at the Dow. So look at the Dow daily. Here we go. Again, this also above the 78 at the moment from this high, heading towards the 89% retracement. So again, they're doing their best to get this market to the upside before the election, which I think is on the 3rd of November. I'll double check that, but I'm sure it's the 3rd of November. Last time it was the 9th of November, but I think it's the 3rd, Thursday the 3rd. So news for today. In fact, before we get to the news, let's just have a look at the implied volatility. This dropping off sharply on Friday as well, which is a key indicator for higher prices. Nothing on the short there, and also the color-coded version going back to green, which again is indicative of the underlying market, i.e. the Dow moving to the upside as well. News, let's have a quick look at what we've got for the week. Today is a bank holiday for the US. Really? I've missed that one then. Which one is it? Does it give any details? Oh, it's Columbus Day. So the US is closed today, so it's all electronic for the stock market then. That's unusual because normally ETX send out an email saying what hours the market's going to be trading, so that's why I've missed that one then. So the US is a all-day holiday. Now, the stock market could be open, but the bond markets will definitely be closed, anything that's government related. So the stock market could be open either way. It's going to be an up day then, isn't it, if a lot of traders are not there and the bond market's closed. Bailey is speaking again at 5 p.m. And then tomorrow we've got UK claimant count as well. That's for, where are we now? October, that'll be for September. CPI for the US tomorrow, and then as we work our way through the week, we've got PPI on Wednesday for the US, Philly Fed on Friday, and unemployment claims, the weekly one, and then Thursday, and on Friday we've got retail for the US and the UOM. So there's a bit of news out this week, but certainly missed the Columbus Day one there. But either way, it's the bonds are closed. Now, again, thank you everybody for your comments on... actually, just before I get to that, I'll just let you know as well, if we move to here, that I've added another silver position. I haven't spoken this for a while because it's been consolidating. Price is closing above the the 20 bar moving average there on Friday. So as it did this, added another position into this trade as well. So silver now starting to move to the upside as the US dollar continues to weaken. Okay, so back to this. Like I say, I wasn't going to talk about it, but I've decided to buy the book about the World Economic Forum, the actual official book that is, and it makes for terrifying reading, as you would expect. But I was sent this over the weekend. Biden has now got the logo as well as part of his campaign, so no surprise there at all. And I did a bit of a search there, putting in Build Back Better, and it's absolutely is tied in with the World Economic Forum. You just get it all the way through the search results, and it's staggering when you think about it's not a pandemic or an epidemic. The numbers aren't there for that sort of thing. I mean, it's not like millions and tens of millions of people are dying like the Spanish flu, and it's been hijacked for the changes that the World Economic Forum wants. And this is their website as well, which makes for very, very interesting reading and potential nightmares as well. They even have one where it says agenda, what the actual agenda is. And you can see that the fourth industrial revolution, geostrategy, economics, environment, and more. And this is terrifying. Look at this. Why artificial intelligence needs a physical body to reach its potential. So that brings up the microchipping aspect of things, rethinking risk and compliance for the age of AI. It just goes on. And there was another one that I looked at, which filled me with dread. I probably can't find it because I'm looking for it. Let's have a look. Events. Is it videos? Wow, there you go. This one. These special masks help people with and without disabilities to communicate because they've got this clear. It's just, you just look at this, and anybody with half a brain cell is going to say, well, this is not going away in a rush, is it? And also the Sky News website this morning. Let me just bring this up. I know where this is going. I've said this before with the masks. Let's just bring it up, see if we've got. There we go. Look at that first headline this morning. It's going to be compulsory, isn't it, to wear masks as soon as you leave the house. These are in the high street now. I had this sent to me a few weeks ago. Here, where I live, they were already putting these signs up in the streets, and that's why it's easy to forecast what these or what the agenda is. You can see there, PM to announce a 3-tier lockdown system after Cobra meeting. It just gets worse, doesn't it? It really does, on the basis that, you know, from the age of 60 down to 0 for the last 8 months, only 300 people have died. Now, of course, that's tragic on any level, but out of 68 million, it's a drop in the ocean statistically. And the age of 20 below is 4 individuals with no comorbidities or underlying health conditions. Again, staggering that students are being locked up in their dormitories. But this is what it's all about. It's about that control. And then when you go back here and you see this, you think, oh, here we go. You just join the dots and you can see what's coming today. So, yeah, interesting times. But this is a website that you'll need a strong constitution to actually go through and have a look at this. It's all dressed up beautifully as well. When you actually see this, you know, it's all pretty pictures and, you know, it all looks good, great, you know, like this virtual ocean dialogues and jobs reset summit. You know, you can see it's all thinking, oh, this is, they're really looking after us, the state of trade, mental health at work, we're going to look after you. God, the mental health has gone through the roof thanks to the draconian measures, thanks to the WHO and the governments who are spouting this, just to remind you, Building Back Better with Biden there. So anyway, like I say, I wasn't going to talk about it, but I'm bowled over by the comments and the support that it isn't just me that can see what's coming down the line here, and we've got to do something about stopping this nonsense on the basis of a false epidemic. Now, it doesn't mean to say I'm a COVID denier. I'm not. But when you've got statistics that actually outweigh that it's not a pandemic and the killer, the average age of those dying is 80.2 years of age. So again, it says it all. So it's just being used as a way of changing the way we our lives are going to be, and that's what the book theme is all about. It talks in there of no normal. There is only going to be a new normal, and we should embrace this opportunity to bring about these changes. So this is the one that's behind it, the World Economic Forum. And if you want the best source for the data, the real data and the graphs of what's going on, then do visit Ivor Cummings YouTube channel. Absolutely brilliant. You'll see that he's been on Talk Radio with Julia Hartley Brewer, explaining these, and a lot of people now are taking note of the graphs that he's actually producing. But of course, it's all overshadowed by the World Economic Forum's agenda. You know, it's all conspiracy or whatever. But this chap has got this sorted, and absolutely brilliant videos. He does short ones here as well, 2 or 3 minutes, and then there's this one here. Be safe heading into this viral winter, which I haven't seen yet, but that's an hour. And then Ireland's second wave is Irish. Also, he does them for all different parts of the world, including the UK updates as well. But very well worth a watch if you want the real data. Then yeah, have a look at this. Well worth visiting. I've watched this channel grow from March of this year, where he started to put the data together, and it's staggering. It's completely different to what you're seeing in the mainstream news, as he compiles all of this and then presents it beautifully as well. Okay, that will do it for today. Say we've got the US markets that potentially for the bond market will definitely be closed, and the stock market is free to move to the upside, of course, as we can see here from the daily charts. Still not at the all-time highs though as we look at the weekly chart, but we can see where we're heading to, of course, is this sort of level here. We just need to take out this high of a few weeks ago. Okay, that's it. As ever, thanks for watching. See you in the next one.